Most traders don't fail because they lack indicators. They fail because they enter at the wrong place. Think about it. Have you ever taken a perfect signal and still lost money? That's not bad luck. That's liquidity. Institutions don't chase the market. They wait for you to enter and then take your money. But what if you could flip that? What if you could trade with smart money instead of against it? In this video, I'm going to show you a powerful fusion model, a system that answers two critical questions: when to enter, where to enter. Because let's be real, indicators alone are not enough. Support and resistance alone is not enough. You need both. Let's start with the execution engine, the brain of this system. This is where timing comes from. First, EMA cross. When fast EMA crosses above slow EMA, it tells you momentum is shifting upward. RSI is not just overbought or oversold. The real key is the 50 level. Above 50, bulls in control. Below 50, bears in control. MACD shows momentum expansion. When histogram grows, momentum is accelerating. ADX tells you if the trend is even worth trading. No trend, no trade. ATR is your risk manager. It adapts your stop loss to volatility. The system gives you visual signals: black candle, fresh entry; orange, retest; buy-sell labels. But here's what most traders ignore: the dashboard. This is not decoration. This is your filter. Bull score above 60%? Only buy. Bear dominance? Only sell.
Now comes the real edge: location. Because even the best signal will fail if it's taken in the wrong place. This is where the golden pivot zone comes in. It's built using two powerful concepts: CPR and Camarilla levels. CPR gives you structure, Camarilla gives you precision. When these two align, you get a high probability zone, the golden pivot zone. There are only two scenarios you care about: bullish GPZ, when S3 is inside CPR. This is where you look for buy opportunities. Bearish GPZ, when R3 is inside CPR. This is where you look for sells. Why does this work? Because this is where retail traders get trapped, and when retail is trapped, smart money steps in. This is not random. This is market mechanics.
Let's break down the buy setup. You only take a trade when everything aligns. Price must be inside the bullish golden pivot zone. The sniper system must give a buy signal with a strong candle. The bull score must be above 60%. EMA structure should be bullish. RSI must be above 50, and volume must not be low. If even one of these is missing, you skip the trade. Your entry can be at the close of the signal candle or on a retest. Your stop loss goes below the recent swing or based on ATR. And your targets: you don't exit everything at once. You take partial profits early. This reduces emotional pressure and allows you to hold the rest of the trade with confidence.
Now let's talk about the short setup. Short trades move faster and often more aggressively. But the rules are just as strict. Price must be inside the bearish golden pivot zone. The system must give a sell signal. Bearish strength must dominate. RSI should be below 50, and ADX must confirm a strong trend. If ADX is weak, you don't take the trade. Your entry is on the breakdown or the retest. Stop loss goes above the recent swing, and targets follow the system levels. No guessing, no improvising, just execution. This section is what protects your account, because knowing when not to trade is more important than knowing when to trade. Avoid trades when price is outside the golden pivot zone. Avoid when the dashboard gives mixed signals. Avoid when ADX is low. Avoid low volume conditions. Avoid news events. And avoid sideways markets. If the setup is not clean, you do nothing. No trade is always better than a bad trade.
Now, let's take it one level higher. Always align with the higher time frame. If the higher time frame is bearish, be cautious with buy setups. This is called top-down analysis. Next, Trade during high liquidity sessions. London and New York sessions provide the best movement. And finally, risk management. Always aim for at least a 1 to 2 risk-reward ratio. This ensures that even with a lower win rate, you remain profitable. This is how professionals survive long-term. Let's be honest, most traders don't fail because of strategy. They fail because of behavior. They enter early, they exit early, they break rules mid-trade. This system works, but only if you follow it. Wait for confirmation and location. Do not chase trades. Take partial profits. Accept losses quickly. You are not here to predict the market. You are here to react with discipline. Now let's set up the system step by step. First, open TradingView and load any chart of your choice. It can be stocks, Forex, crypto, whatever you trade. Once your chart is open, go to the top panel and click on the Indicators button. This will open the search window. Now, in the search bar, type Consob Sniper V02, or any similar sniper-based script available in Community Indicators. Click on it, and it will be added to your chart. This indicator acts as your execution engine. It will provide buy and sell signals, candle colors, and a dashboard for confirmation. Next, we add the location engine. Again, click on Indicators and search for Camarilla pivot points. Select it and add it to your chart. If you don't find the exact one, you can also use a combined script that includes both CPR and Camarilla levels. Once added, go into the settings. Make sure CPR is enabled and also ensure that R3 and S3 levels are visible. These are the most important levels for this strategy. Now, clean your chart. Remove unnecessary indicators, drawings, or clutter, because a clean chart leads to clear decisions. And that's it. You now have both parts of the system ready. Trading is not a game of action. It's a game of patience. It's about waiting for the perfect setup, executing with precision, and managing risk without emotion. When you combine the right location with the right confirmation, you stop being random, and you start becoming consistent. And remember this one rule above everything else. Don't trade every signal. Only trade when the market aligns with your rules. That's how consistency is built.